here with Nvidia this morning. As the company has tripled in value in about a year, is this growth sustainable as investors continue to reward the AI hype?
I think it is sustainable. We are in inning 3 or 4 of this AI bull market. I think that we are still early, as uncomfortable as that sounds and maybe feels. But I think it's going to feel uncomfortable all the way until we get to eventually being in a true AI bubble, which we think is kind of the culmination of this bull market. And then people will stop talking about valuation altogether. So that's the odd sort of counterintuitive reality is we're worried right now that things might be over. It's probably not over. When we stop worrying, that's...
Is this rise sustainable if investors continue to reward the AI hype? Consider Nvidia, a business that has tripled in value in roughly a year. It seems sustainable to me. This AI bull market is in its 3rd or 4th inning. As unsettling as it may sound and feel, I believe we are still in the early stages. It will continue to feel uneasy until we eventually arrive at a real AI bubble, which we believe is the pinnacle of this bull market. At that point, valuation will be completely forgotten. The strange, somewhat paradoxical truth is that, although we are currently concerned that things may be over, they are most likely not. You want to start worrying when we cease worrying. Today's video delves deeper into Nvidia, a dominant force in the technology business that, like Tesla, has transformed its sector by controlling every aspect of its tech stack. Nvidia has established a remarkable market share and is still pushing the envelope in terms of innovation, from GPUs to complex software and firmware upgrades. We'll examine how Nvidia and Tesla have risen to the top of their respective markets using comparable strategies for maintaining technological control and guaranteeing backward compatibility. We'll also analyze Nvidia's present financial situation, delving into stock prices and the implications of these numbers for possible investors. Keep checking back as we break down these intricate subjects and give you a thorough grasp of Nvidia's current position and future course in the highly competitive world of tech investments. Let's explore the fascinating realm of AI, Nvidia, and Tesla technologies. But first, be sure to subscribe to Tesla Stock News and like this video to show your support. Let's begin. Let's focus on Nvidia, a business whose quick ascent has drawn interest from investors all around the world due to its valuation tripling in a single year. However, the question remains, will Nvidia be able to sustain its rapid expansion? Nvidia's trajectory has been nothing short of extraordinary, evoking memories of Tesla's own quick climb in its early years, much like Tesla's incredible success in the automobile industry. Deepwater Asset Management's Doug Clinton provides insightful analysis, arguing that we are still in the early phases of an AI-driven market expansion, similar to the initial boom in electric automobiles powered by Tesla. He suggests that this AI bull market may be in its 3rd or 4th inning. Even if this stage looks hopeful, there remains a certain unease that may last until we approach what could be called a peak AI bubble. It's not just Doug who is feeling bullish. Navin Associates Chief Investment Officer, Linia, has made a daring prediction for Nvidia. It may overtake Microsoft with a $5 trillion market valuation. I have a question for you. What would be the one stock you would keep if you had to sell everything else? It would be a monopoly, then. Nvidia, NVDA, is arguably the best monopoly at the moment. Artificial intelligence graphics chips are what that is. In a few years, the stock will be worth $300. To put that into perspective, a valuation like that would propel Nvidia past tech behemoths like Apple and Microsoft, evoking comparisons to Tesla's own disruptive influence in overtaking established automakers. This presents an interesting situation for investors. From $15 billion to an expected $100 billion this year alone, Nvidia's primary business, its data center division, has grown rapidly. This extraordinary growth trajectory reflects Tesla's quick industry expanding and highlights a move toward generative AI that is changing the software and computing ecosystem. Similar to how Tesla has led the way in the electric vehicle industry, Nvidia is positioned as a leader in this technological revolution thanks to its all-encompassing market approach, which is defined by its scalability, sophisticated software, and networking capabilities. The sustainability of this rate of growth is hotly debated, though, as is the case with any rapid expansion. The growth of data center installations, which are already worth at over $1 trillion, indicates that a sizable market is still ahead, even though the pace may not quite reflect the previous 2 years. As Nvidia gets closer to reaching a $5 trillion market valuation, it's important to remember that this accomplishment would not only put its economic clout above the majority of global economies, but also demonstrate how strategic acquisitions might increase its presence in a number of industries. Like Tesla's move into energy solutions in addition to cars, Nvidia and Tesla demonstrate the potential for enormous development. Estimates place the AI market's compound annual growth rate between 2023 and 2030 at 37%. Similar to Tesla in its growth trajectories are a crucial factor to take into account when contrasting Nvidia with tech behemoths like Apple. With all due respect to Apple, Nvidia's rapid growth is comparable to Tesla's ascent. When comparing their latest quarter's financials, Nvidia's revenues soared by an incredible 237%, while Apple's fell by 4%. Over a 10-year period, Nvidia's revenues increased by 991%, much surpassing Apple's 56% increase. Similar to how Tesla was once against established automakers, this sharp difference highlights why Nvidia, not Apple, may be the more exciting growth option at the moment. Nvidia's competitive advantage goes far beyond financial indicators, and it is strikingly similar to how Tesla's groundbreaking inventions have revolutionized the transportation industry. Nvidia is at the vanguard of the artificial intelligence revolution, much like Tesla, which has continuously led the market with its innovations in electric powertrains and battery technology. Nvidia has been advancing AI technology at a rapid pace under the direction of CEO Jensen Huang. Huang recently unveiled the newest AI chip designs, including the Ruin and the soon-to-be-released Blackwell model, which demonstrates Nvidia's dedication to staying on the cutting edge of technology. Similar to Tesla's introduction of innovative high-efficiency batteries that have raised the bar in the automobile industry, these advancements are not only small tweaks, rather, they mark substantial leaps forward in capability. Nvidia's ambitious and well-defined roadmap reflects a calculated strategy to take the lead in the AI market. For instance, the Ruin architecture promises to speed up a variety of AI applications, from sophisticated data analytics to driverless cars, by improving machine learning speed and efficiency. Comparably, the Blackwell model is set to launch even more advanced features, such as improved neural network performance and increased energy efficiency, which are essential for scaling AI solutions in environmentally friendly ways. This aggressive approach to AI chip innovation is similar to Tesla's approach in the electric vehicle market, where the company has maintained its leadership position thanks to ongoing improvements in battery life, vehicle autonomy, and energy efficiency. Nvidia is influencing the future of AI by establishing new industry standards and supplying the core technologies that will underpin the upcoming generation of AI applications, just like Tesla has not only contributed to, but also spearheaded the EV revolution. With high bandwidth memory and ultra-fast switching, Jensen is leading a huge computational shift with the goal of greatly improving performance and securing Nvidia's dominance in the AI GPU market, much like Tesla has done in the automobile industry. Furthermore, Nvidia's software capabilities are equally as remarkable as its hardware advancements. Just as Tesla's proprietary technology has established itself as a standard in the electric vehicle business, the Hyundai software platform has done the same. Similar to Tesla's hegemony in the electric vehicle market, this ecosystem strategy fortifies Nvidia's position as a leader and erects formidable obstacles for rivals. Examining Nvidia's market approach in further detail now reveals that the company has mastered both innovation and market adaptability. This type of comprehensive control is similar to how Tesla maintains compatibility between new software upgrades and older models while continuously developing its electric cars. It is a tactic that not only preserves but also increases market domination and client devotion in the ever-changing tech sector, where firms such as Nvidia are always establishing new benchmarks. Traditional stock valuation measurements, such P/E ratios, may be questioned for their applicability, but they are nonetheless crucial. Traditional valuation criteria offer crucial insights into a company's financial health and market standing, even in the face of dynamic swings in market conditions. An example of the significance of these indicators is Nvidia's stock, which peaked at over $900 after selling at about $150 in July 2022. A stock price increase of this magnitude encourages investors to look beyond the numbers. Conventional valuation methods force us to examine more in-depth factors, like Nvidia's strong dependence on a small number of important clients, which could be problematic if these connections falter. Furthermore, Nvidia's market share and profitability